Hello World Wide Web, welcome to another stock video. This one's on Silicon Valley Bank. We're going to do a deeper dive, get some coverage of them, find out what's happening next, what to expect, who it affected. We're going to take a deep dive into what happened here. Silicon Valley, ticker symbol SVB, went from I guess $300 a couple of weeks ago to 106 right now. Trading was halted. It was probably on its way to zero, but they stopped trading early on in the day, and they were, I guess, raided. I don't know what the right word for it is, but the FDIC, the people that insure $250,000 for your account, they took them over, kicked out everyone, and took over the building basically, and they said they're going to start running it on Monday. It seems like initial reports have them raising money on variable rates and then loaning money out, fixed loans for homeowners, 3.5%, 4%. And the way they get money is partially or fully with variable rates. So the bond prices go up and up and up. In order for them to replenish themselves, they have to go take out a high interest loan, which is higher interest than the money they're collecting from the mortgages that they made. At the core, that seems to be what happened. I don't know where they're getting their variable rate loans from, or where they're raising money on a variable rate. It's brought into question, in my mind, lots of things about the banking industry. What do they call an asset? If you make a loan and it's a collateralized loan, is that collateral now your asset? How solid are these things? Do they lose money? Could they be worth more in fiction than they are in reality? Did they suddenly lose 70% of their value? Things like that. They might not even adjust the balance sheet for it, but whatever it was could be garbage. It seems like the world is very late to the party here. This one's been looking for investors for the last couple of days to keep this negative business cycle afloat, I guess, for years and years and years, until interest goes back to 0%, so they can play the same game some more. But they were actually trying to raise investors money, and they decided not to, probably to keep themselves out of jail, because they would have been committing fraud to not tell us all what happened, and then to raise billions of dollars and then screw everyone over and have the same collapse. That's my own prediction theory. That's why they didn't con all the investors out of their new capital that they would have needed to continue this fraud. But they've been losing money for quite a while, and I guess it finally caught up to the books, and they couldn't put it off any further. And then they all of a sudden come out and froze the stock today, and then they told us that it got raided and shut down. So let's see some news articles, see what happened. This one's from CNN. Silicon Valley collapsed Friday morning after a stunning 48 hours in which a bank run and a capital crisis led to the second largest failure of a financial institution in U.S. history. I don't know who was first. Was it Lehman Brothers or Bear Stearns? Not quite sure. California regulators closed down the tech lender, put it under the control of the U.S. Federal Deposit Insurance Corporation. The FDIC is acting as a receiver, which typically means it will liquidate the bank's assets to pay back its customers, including depositors and creditors. $200 billion is the grand total of deposits on this bank. That's how much of a customer's money they're holding. I don't know how much of it they've lost or loaned out. I don't know if there's going to be a government bailout on this thing. I guess that's always possible. 90% of the money they kept on deposits, basically $180 million, had no insurance. The FDIC only covers $250,000. People have payrolls that are bigger than that, and they won't be able to get their money out to make payroll. So people aren't going to get their paychecks for a while. Roku had $500 million in stock in Sun Valley Bank, and that's just kind of frozen and gone for a while. It might show up again one day. It might not show up again one day, and half of it might show up one day. It's probably why they were smart enough to put their money in multiple banks. Why they chose a regional one, I'll never know. But that's the decision they decided to make, and these people, this should be illegal. I can't see how you could raise capital with on a variable rate and then loan it out on a fixed 30-year. It just seems like, next time interest rates go up, the whole thing blows up in everyone's face, and you have to close. Then you have a run on your bank, and you can't pay everybody fast enough. You don't even have their money anymore. So yeah, it strikes me as very illegal. They're going to call it all kinds of different things, and it might be illegal in the long run. We're going to find out. Here's a little picture of people at the bank trying to get their money out. The place was surrounded today by media. Anyhow, we're going to do a little bit more research, and we'll bring it to you. Stay subscribed to the channel and like the video, and I'll get you some more updates on a full comprehensive list on who their customers were. I want to know what other businesses are going to wake up Monday morning with new problems, destroyed quarters, money they may never get back. Then we're going to explore how much of everybody's money they're going to get back, find out how much money was lost so far, find out how much capital they have left. We'll get an idea for how much Roku will be getting back, and everyone else, whether it be 90%, 100%, 50%. We're going to figure that out. So subscribe to my channel and get the updates. Thank you very much. Have a great night. I'm James.